Hey guys.
Hey everybody, Matt Hill in the Trace Management Podcast Studio. They're my loving sponsors who give us space. They're an engineering firm for oil and gas, so if you need consultants or just about any kind of engineering, reach out to Trace Management. And I call this the Talking Energy Show, and it's brought to you by Oilfield Tailgate, because all of the people that pitch in for Oilfield Tailgate, I just want to promote them. So you see all the sponsors. If you go to the page, oilfieldtailgate.com, you can go through all of them, click their links and thank them. Or if you want, pitch in, be a sponsor yourself.
It's a great event.
Come on the show. Yeah, we have 700 people approximately come through the tailgate parties every home game. So there's one place to network.
Boomer sooner.
Boomer sooner. Also, we accept everyone. So if you don't wear the right colors, you're welcome to still come down, and we'll accept you. We'll give you free drinks and food and all the fun you can possibly have at a party. But that's not really, why I do it. I want the tailgate, the whole Oilfield tailgate to kind of be a vehicle for talking to people and networking and promoting, your logo. So if you're a sponsor, you can slap Oilfield tailgate everywhere.
Yep.
We know we're in business development and marketing, and you've been in a long time. We find vehicles to get the word out about everything.
Get your brand out. Yep.
Introduce yourself.
So, hey everybody. My name is Lisa Morando. I'm with Laird Walkingstick Insurance. I've known Matt Hill for probably about 6 years now, and I've worked in business development side by side, never as a competitor, thankfully. But
Everybody's my competitor, Lisa. I was sizing you up.
No, Matt's very inclusive. That's part of why he does so well. But I started out as a MWD with Baker Hughes, and then I sold casing for Tenaris. I sold solids control, drilling fluids, managed pressure drilling, shakers, portable power, and well containment cellars for NOV. So I've gotten a good taste of a lot of the ins and outs for upstream drilling here in oil and gas. And then I moved over into the commercial property and liability insurance space a little over a year ago, hoping to service the oil and gas industry from a different side, since I had some experience on what it's really like being out there.
A lot of experience. I mean, really, you've done a good job. Everybody loves you. You're very well known, very well loved by our industry and appreciated. And now that you're on a different path, you're still part of us and vital.
Well, thank you. I appreciate that.
She was vital in getting me to even start doing these things. I wouldn't be here today unless she was the very first person I ever asked to be on a podcast, and pitched right in immediately and wrote the script for us. And I was like, oh, thank God somebody's actually taking this over and running with it.
Well, it was both of our first podcasts, so.
Yeah, I wouldn't be doing this at all. That lady had asked me if I wanted to be on hers, and I was like, I don't want to be any part of that, but I want to interview my good friends I find interesting, and especially, young people in oil and gas that are going to be our leaders someday, right?
Yeah, well, thank you. I feel lucky to be included in that list. But, what oil and gas does for the world is very important. We provide low-cost energy to the entire world, and, that's something not to be taken lightly. So I'm definitely a big proponent for our industry and everything we do for the entire world, and I'm grateful to have been able to service it out on the rigs, boots on the ground, and then now to be servicing these companies on the insurance side to protect them, so that if something were to happen, instead of going bankrupt, they've got coverage.
Yeah, man, I mean, it's impossible for me to, get my head around how much energy has become more and more important in the forefront of everything. Yesterday, you've come to the Oilfield Christian Fellowship,
Right.
And she gets up there, the director from City Rescue Mission here in Oklahoma City, where we host our Oilfield Christian Fellowship meetings, and we give all of our resources to them as we collect, fundraising. And I mean, I get choked up thinking about it, but just all the people involved in giving to the homeless right now, because energy costs may have gone up. Some family had to pick between paying their electric bill and keeping their kids warm, or paying their mortgage.
Right.
And all of a sudden they're evicted. And then we've got a facility like City Rescue Mission, thank goodness, is there as a safety net.
Mm-hmm.
But this is going around. This is globally happening to people being starved for energy.
Right.
and affordable energy. So, all hands on deck.
Yep.
And you have ways to insure us.
That's right.
So me, as the vice president of Night Fire, what are just some of the things, as a service company and then as an operator that you think are, immediate that you need to take care of that you've seen like people don't have? Just give it all to us. I don't know enough about insurance at all.
Yeah. So when you're looking at a commercial insurance package, the first thing you need to do is you need to understand the business that you're trying to insure. You need to understand what their risks are, and then they have the ability to retain some of that risk or self-insure, or they have the ability to purchase insurance to protect them if an event were to happen. So I'll start first just on if you're an operator or somebody that has working interest on a well. So pretty standard, I'm sure all of you guys know about this, but you'd want to get a control of well policy. So that will cover you if you were to have a blowout. So that would cover, getting crews out there like boots and coots to come suppress the fire, get the well back under control. It's going to cover any cleanup and containment that you need to have after this incident or blowout has occurred. And then it's also going to pay for getting you back to wherever you were at in that well prior to the blowout. So if you had drilled to 10,000 feet and then after the blowout, the part of the hole was lost, it would help you to drill back to wherever you were at prior to the incident, or if you had lost the casing string or things like that, it helps to pay for those. So a good control of well policy is vital anytime you're doing a drilling project or a major recomplete. And you can also carry that policy on producing wells if you so choose to. Different operators, some of them say, hey, that's not a big risk for us on our producing wells. We don't want to carry it on those wells. Some people want it on everything. It's, personal preference, and we could have those discussions for each well as we look at those risks. A new product that was released within the last quarter it's for increased cost of drilling or completion. So if you are someone with working interest, you're a working interest owner, and you've got a well coming up that you've got a set AFE for the drilling and the completions, you can purchase insurance for scheduled wells that you plan to drill or complete, as long as it's a developmental well on U.S. land. So it can't be some exploratory well, because we're going to be looking at offset data on other wells nearby, their AFEs, and then what they actually ended up costing. But so if you were to get this increased cost of drilling or completions, essentially if you had your AFE and then you exceeded that AFE because of a geologic anomaly, such as a fault, a rubble zone, an area where you're taking saltwater flows, something like that that's unpredicted downhole that causes you, maybe you lose 10,000 barrels of oil base because you drilled into a fault that you were not expecting. This policy would pay up to $3 million per well for however much you went over your AFE. So if you went over by 4 million, it's only going to pay out 3 million per well. But if you went over by 2 million, you'd have a little cushion, which for some of these operators that, maybe they're private equity backed, maybe they're self-funded, they can't really afford to spend an extra $3 million
That might have been their only well they ever get to drill.
That's right. Yeah. So this product is essential for people that are trying to really control their cost. And so it covers the geologic anomalies, and then it also covers mechanical failure. So if you were operating your tools or equipment within their range of what their operating parameters are, and you had, let's say your drawworks got jammed up, and then you got stuck down hole, and you've got all the non-productive time and all the guys on site, and you're down for 3 days, and then you get stuck, and this product would also cover those costs. So that would be another option that could be bundled with your control of well package as an operator, or you could just do it as a bolt-on. You can leave your current control of well policy in place. And again, you don't have to have it on every well. You can schedule the wells that you want to add it to. And again, we'll go through some underwriting and look at some offset wells, what their AFEs are, how much they ended up costing when it was all said and done. And that's a new product that, a lot of people aren't aware of that could really save them a lot of money. Yeah.
That's a lot of money.
Yeah.
And that happens. How often do you think that even happens in our industry?
I don't know. I mean, when I was at MWD, I watched it happen all the time.
Yeah.
I've sold drilling fluids before. I know there's certain areas in Oklahoma, certain areas in Wyoming, certain areas in South Texas where, 1 out of 10 wells, you lose 10,000 barrels of oil base. And at $100 a barrel, that's several $1,000,000 that you weren't planning for. So I've seen that firsthand on the mud bills. And then I've been there, I've been out there when we were drilling in Oklahoma. We were at 12,000 feet TVD. We were about 5,000 feet in the lateral, and we kept, we'd go to slide, and then we'd back out of our drill pipe. Okay, so of course you trip in and trip out, and that takes, a day and a half.
Yep.
Each trip. So now you've been down for 3 days. We get back on bottom. We're trying to slide. We back out of the drill pipe again. Company men are trying to run us off because they're just calling us back out. They're so mad at our DDs. Come to find out, the ST80 was miscalibrated by over 10,000 foot-pounds. So the reason that we were backing out of everything was we didn't properly torque up our connections. But that was a week of downtime due to a mechanical failure. So those two examples I just gave you, I mean, I don't know. I think how often it happens is completely dependent on the area that you're drilling in. And I think that a lot of
It's rough. I mean, we don't love we love touting our wins
Right.
in our industry, but
Right.
those failures we know about. We just don't like.
Yeah,
those
and you never
exploited.
know what's going to happen downhole. But I do feel that a lot of the experts in our industry, and I'm going to say there's a lot of them, they know which areas in their acreage position. Like I said, 1 in 5 wells, 1 in 10 wells, they run into some downhole geologic anomalies, and/or our service providers know it's like, hey, we're doing our QC on all of our products, but sometimes there's a mistake. And so this just gives you a little cushion for that.
And you're going to have to quote each well for that. Really, you don't really have like a blanket price. You're going to have to look at that zone. And
Yeah, well, when it comes to pricing, that's a really good point that you bring up. The cost for this product is 0.25% of your AFE cost for the well. So if you had a $10 million well, that's a $25,000 policy. So I think 0.25% of the AFE to get up to $3 million in coverage is a good deal.
On a high risk.
Yeah, and you don't have to do it for all of your wells. Once again, I think that each of our leaseholders or working interest owners, they know their acreage positions well enough to know, hey, this area could be tricky.
Yep.
So they can choose where they want to spend that money.
Well, no one's going into this. I mean, that's the one good thing for investors in insurance for oil and gas is we're all very protective of those wells. We don't want to see them fail.
No.
So, we're doing everything possible to make sure that insurance is there but never utilized.
Right. Well, and then I guess if we're talking about operators, another policy that we write for operators is downhole tool insurance or lost in hole. So it's for your MWD tools and or wireline tools. You guys all know how expensive those are if they're lost downhole. So essentially we would insure the tool so that if it got stuck or lost downhole, the policy would pay out instead of having the operator have to pay that, $300,000 or $500,000
Or
for that.
$1 million
for the
for
tool.
some of the tools.
And the main area that we've found a lot of traction for people looking for those policies, and I'm not throwing anybody under the bus here, but
You can just say operator. It's fine.
well, with different service providers, I'll just leave it vague. There's
Yes.
different service providers. Any service provider that you're using for your wireline or MWD tool, they have language in their downhole tool insurance. And some of the big boys in their language for their downhole tool insurance, there's things such as you need to attempt to fish for the tool and prove that you latched onto the tool at least 3 times to get the policy to pay. So nobody should be paying for that insurance policy because the odds of you being able to prove you latched onto the tool are about 0. And if you did latch onto the tool, you probably pulled that sucker out. So you don't need the policy. So I've had several sales reps for these different service providers tell me point blank, we tell our customers not to buy our insurance policy because it'll never pay out and it's going to piss them off. So then they send them my way. And then additionally, another one, it's got language you have to latch onto the tool 2 times, and those are 2 of our largest service providers in the world.
Hey, that's a rough spot to be in. You've got your own equipment downhole that you don't want to lose. It is real. I mean, so say one of my jars, right? I mean, if you lose one of my jars downhole, it's about $150,000 tool, right?
Yeah.
I mean, if as you build it, but
Yeah.
I mean, some people are like, oh, it's only $150,000, but we do not want to lose a tool.
No.
And now I'm relying on a third party to go and fish it out.
Right.
I mean, it's like, oh man, we can't afford to lose tools anymore. It's too hard to get replaced. We may never get that tool back once we get even if we get the money.
Yeah.
You know.
Well, are you guys asking the people who are running your tools to purchase insurance on them, or do you have it in your contract that if they lose it, they pay for it?
A little bit of both. I mean, yeah, and they have their own insurance. You know,
Yeah.
it goes both ways. All vendors, you know, have their own ways you can insure, you know,
Right.
that stuff.
Yeah.
But like you said, you know, once something's downhole and you can't grab it, you're hoping that another party
Yeah.
can do it.
Or some of these MWD wireline carriers, their policies will say it'll pay out up to 50% of the value of the tool.
Wow.
Well, maybe you don't want to have to eat that other 250,000 or 500,000. That's where you'd come to me to get, 100% of the tool value covered. So things like that for operators are some ways that we can come in and help. When it comes to service companies, the term service company is so broad.
Yep.
Because, as I said, just right on the front of this is the type of insurance you need is completely dependent on what your business is and what the risk is in that business. So if you're a service provider that goes out on site, you are boots on the ground when someone's drilling a well or completing a well, you're going to need more insurance or a more expensive insurance policy than somebody that's just dropping off tools on site, never really setting foot on site and leaving. So if you were a service provider that was boots on the ground, there's some endorsements that you're going to want on your policy to ensure that if something happened, you would have coverage. So, like some of those endorsements would include, there's something called a underground resources endorsement. So that would be on your general liability policy. So that just means that if something happened on site due to your guys' work or your equipment and you caused some kind of damage downhole, to the reservoir, maybe you polluted the water table, who knows what happened underground that you caused that issue, this policy would pick up and pay for those third-party damages. Maybe you fracked into somebody else's well and they're saying you ruined our well and we're going to sue you for the dollar value of the well, right? So that underground resources endorsement is crucial to your business. Another one would be blowout and cratering insurance. So again, you're the service provider, you're out there drilling the well, completing the well. Well, your operators have a control a well policy for a blowout, which protects the first party. It protects them. Versus this blowout and cratering endorsement for the service companies, it protects third party. So if you're paying for bodily injury or property damage to others. So if somebody else was hurt out there and it's deemed your fault, your policy is going to pick that up. But if you don't have that blowout and cratering endorsement, you have no coverage. And that could be the difference between going bankrupt after a loss or, as sad as it is that people are injured or property is damaged, you just move on down the road and your policy pays for that. That's what you pay for insurance on.
Well, for now, because there's definitely winds of change blowing. There's insurance companies out there that don't really even want to be involved in oil and gas anymore.
Oh,
they
yeah.
don't want the risk.
We see that a lot. I
mean, what you're doing now is like essential to oil and gas, and we're like thankful that the people that are involved with you want to be involved.
Well, thank you. Yeah, the whole reason I even got into insurance, my fiance has a health insurance brokerage, so he does employee benefits, meaning health insurance, 401k, all of that. So I'd been going around to some of my oil and gas contacts, trying to get him in the door, just saying, hey, can you have Ryan come sit down and talk to you about your health benefits? And a number of people said to me, Lisa, what we really need help with is our commercial property and casualty insurance.
We're underinsured.
Yeah, they said,
no one will take us.
No, they said, my agent doesn't understand what we do.
Yeah.
If I want to get downhole tool coverage, I called him 20 times. I tried to explain we are in cased hole, not open hole. This is going to be a quick wireline run. We're going to be downhole a matter of hours, not days. Their agent just wasn't familiar enough with the industry to understand the terminology that was being used to then be able to even communicate the risk to the carrier. So it really was something where I realized there was a gap, where it was an underserved market, because oil and gas is its own animal. We have our own language. We do things differently than a lot of other industries. And if your agent doesn't understand your business, they might not write your policy correctly. And there's a number of agents out there that are competent to write oil and gas, but not very many. So that was where I thought,
You're the only one. If you're in oil and gas and using anybody else, there's no point.
I wouldn't say all of that, but I do feel that
The phone's gonna be ringing off. You're gonna get more phones.
I do feel like, having a firsthand experience of being in the business on multiple different sides, being in operations, it helps me to understand how people run their businesses and to better help cover their risks. So it's been really cool, actually, to get to sit here and really sit down with the different company owners and understand, okay, what is it exactly that you guys do? And then also, what are your safety programs? What are your safety training? Like, what are your onboarding processes? What is it that you have in place already that you're doing better than other people that I can highlight to the insurance carriers to try to get you a better deal? Because insurance is expensive. So it's my job to tell the story and paint the picture of what we're doing to help prevent those risks so that I can get you a lower price.
Yeah. And we're going to need that because we're bringing on more people.
Yeah.
Our whole industry is begging for hands.
Right. Yeah. That's a whole nother animal that I don't have a solution for. We are definitely shorthanded. It's hard to find people that want to work. I've talked to a lot of people, some of my friends work at H&P, Baker, Halliburton, anybody where
Anyone
you're trying to hire them and
for more people to bring on.
Yeah, there's not very many people there that really want to work. Maybe they're just showing up to the job fair to just prove that they attempted to interview somewhere, have you sign their sheet of paper and they leave. Or, you tell them you got to take a drug test. Again, they just leave. And then the ones that actually allegedly wanted to work, okay, they pass their drug test, they show up, they get out on site. Some of them don't even last a day out there because it's hard work. I lived on rigs for about a year and a half. I put in those 12-hour days, which sometimes were 36-hour days, depending on if we're rigging up, rigging down, stuck, who knows, all hands on deck. So
also drive out here and drive back, and like your windows breathing at you, and there's snow, coming at your windshield, and you're like, oh my gosh, so dangerous.
Well, and I know this is this podcast is tailored to oil and gas professionals, but in case there's anybody else on here that is listening that's not in oil and gas, what this community, this industry does for the world is huge. These guys are out there, guys and ladies are out there working 12-hour days, like Matt said, in the 100-degree weather, in the snow, grinding so that you can have your fireplace turn on, you can heat your home, you can drive your car. Like, it's a big deal. And I appreciate everybody who is out there on holidays, because these rigs run 24/7. They don't lay down because it's Christmas. They don't care that it's New Year's. I've been out there myself on Thanksgiving, and that becomes your family, is the people out on the rig with you. And
I've missed
it's a big deal.
Everyone's birthday before. I've missed every holiday before, just because. And I agree, they're heroes. And man, the political climate around the globe is a little bit scary for a lot of people. And we as Americans and offer a way. We can do it. We can provide the entire planet, affordable and abundant energy, low cost, and with, the chance to be free in your own country.
Mm-hmm. Yeah, energy independent.
Yeah, we don't want, we're not going around the globe and wanting to wage war. We're trying to give everybody the same opportunities we have.
Right. And when it comes to, wind, solar, other energy,
we need them all.
Renewable energies, that's right. They are a part of the energy equation. One of the beautiful things about oil and gas is oil and gas, it stores the energy for you. You can transport it to different places. That's why it's a reliable, low-cost energy that, you could make the argument that there's cleaner options out there, but in our with current technological advancements and current infrastructure, right now it really is the only reliable energy resource that we have. And, solar, wind, all these renewables, again, they're part of the equation.
All made by oil and gas.
Well, and Yeah, I mean, that's not even to talk about the oil and gas byproducts that we use. Of course, we run our
It's
vehicles,
amazing, yeah.
but 99% of the components in your iPhone are made from oil and gas byproducts. So if you want to say you're anti-oil and gas, try throwing away your phone and see how you feel about it then.
If you're anti-oil and gas, and I always tell people this because I can't wrap my head around not having oil and gas other than you take off all your clothes
That's right.
and you walk into the woods and you survive because that's it.
Good luck surviving.
I mean,
I'd have trouble.
I'd be okay.
You'd probably be okay. I would
I'd
not.
probably low-key enjoy it. Like, I'm rubbing sticks together. I made fire. I built a hut. I have a loincloth now from an
Yeah.
animal. I don't know what kind of animal
Yeah,
it
he wove
was.
some leaves together.
I saw something stirring in the woods. And I stabbed it with my pointy stick. I'd be all right.
Yeah. Well,
But, you touch on technology, and that's, something that I just find fascinating that our industry has gone so quick to automation and data. But as we automate, so we may not be swinging as many sledgehammers anymore and using, muscle, but that means that there's some new gadget or some new, whatever it might be. That means that we need even more people because that gadget now requires like the inventor and the
Right.
tech to fix it and run it. So every person we get rid of that might be, using their muscle, we probably need 5 people in our industry doing the new job
Yeah.
created by the new technology.
Right. Well, and I think that's another good point that you bring up to anybody out there listening that maybe they're not in oil and gas, maybe they're at a point where they're in their career where they're trying to decide what their next move is. I think a lot of people get this idea in their head that oil and gas is for,
Roughnecks.
old men or people that, just want to go out and do serious manual labor. And I'd like to, combat that thought process and say, no, oil and gas is high tech. It's sexy. NASA borrows a lot of its technology
Military
from
borrows,
the oil and
everybody.
gas industry because we are leaders in, we're drilling 15,000 feet deep and then we're doing 3-mile laterals. And I'm
And
sure.
talking to that equipment.
Exactly,
Underneath the
downhole,
ground.
mud pulse telemetry,
Yeah.
like that was the thing. I studied chemical engineering. I had the opportunity to go into a lot of different industries, and I chose the oil and gas industry because I'm so passionate about the fact that we're powering the world, and it's not some ancient technology. No, we are on the cutting edge of technology, and if you want to do something cool and exciting and use the most high-tech components that there are, this is the place to be. So I also want to put that out there to anybody that's trying to decide, what do I want for my future? Oil and gas is a great place to be.
It's never going away.
I would say at least 100 years. It'll be at least 100 years before it backs off because our
double that
energy
in a
demand is increasing every year. So, I mean, again, even as the renewables come on and are able to provide more energy, which is great, we're going to need it. Our demand is growing so quickly that the oil and gas demand is also increasing.
The only other molecule of energy we could use would be, nuclear.
I think that nuclear is going to make a big comeback,
Yeah.
but
We have to go and explore how to use it.
well,
We've developed oil and gas for so long. We're really good at it.
Yeah.
And we're only getting 10% out of the ground
Right.
of what we really, could, other than natural gas, which is even better
Yeah.
than oil. So nuclear is going to take a while for those efficiencies to, make themselves known because of research and development.
Well, and I think there's a lot of efficiencies to be had with nuclear. I think that's going to be an energy resource that we're going to be looking at in greater detail.
I've seen Back to the Future car where he just dumps some stuff into the top of his car out of the trash can,
Yeah.
and it melts it down into the atoms, and then
Right.
shoot, he's flying off in the car.
Right.
Where's my flying car?
Well, yeah, I mean, the reactors that they use for either nuclear fusion or nuclear fission, there's, those reactions are chain reactions and they can generate energy. We've seen firsthand from some of the different nuclear facilities that were in Russia that were not designed properly, that took out the whole city and still are uninhabitable. I think that as we get more of a standardization in the plant design for these nuclear fission, nuclear fusion facilities where there's supposed to be barricades, it's supposed to be an isolated chamber to where if there was something that were to go wrong, there are barriers in place to prevent, some of these tragedies that have happened at some of these less, plants that were designed poorly. So I'm hopeful that that will be another part of the energy equation.
Although I am looking forward to Godzilla finally coming about from Japan. That's super cool.
Oh, well, I hope I'm not around for that
The
one.
whole nuclear facility slides into the ocean, and now Godzilla any day now is coming out. I'll finally get my real life movie.
Yeah, any day now. But yeah, the nuclear facility should not be on the coastline, but we digress.
I mean, it's whatever. I guess they were using the ocean water to keep it cool, something like
yeah.
that. And then, you get enough of that in the ocean. I'm sure it probably won't be as cool as Godzilla. It'll probably have like fish.
Well, I think part of the reason you don't want to put them by the coast is because if you were to have a explosion, you can induce hurricanes and tsunamis, and that's happened in the past in Japan.
Impressive.
I was just having a conversation with my grandfather about nuclear energy this last week.
Of course you were.
Yeah, he's a PhD electrical
Yeah.
engineer, and he's convinced that, well, Rolls-Royce right now is
Did he come to the tailgate party with you that time too, or just your dad?
Just my dad.
Yeah, he's cool. I like him.
Thank you.
Great
But
guy.
yeah, Rolls-Royce, like the car, is investing in nuclear power plants. So it's my stock pick this year. Watch out.
Nice.
Yeah,
Got any others?
just that one for now.
See, I like ETFs because
I've got a lot of ETFs. Yeah.
and by all means, I throw a lot of risk at oil and gas.
Yeah.
I get involved. I'm like,
Well, you understand the market. It makes it
even if I don't, I'm so passionate about it. I
Right.
maybe overbelieve. And it's like, you know what? It's okay. I'm going to put all of my money in oil and gas.
Yeah. I like to diversify a little bit.
Yeah, I should probably let somebody else handle my money sometimes because I'm like, it's going to be fine.
Yeah, I've hired help for sure.
So I want to get back to insurance because I can't get enough of what you're doing these days. And so me as a service company, what should I be looking at as my budget? Like what should my budget? How much of my budget should have insurance on it?
Yeah, so that's a great question. Again, depending on your line of business, depending on your risk, you're going to see differences in your premium for your insurance. The premiums are pretty much always rated on either your company's payroll, your company's revenue, or if you're talking about a control of well, it could be like footage or number of wells and information about the wells. A lot of people are like, that doesn't make any sense. Why does it matter how much money I make to insure me? But essentially, the more people you're paying, the more revenue you're generating, the more business you are conducting, the more likely you are to have a risk. So as your revenue goes up, as your payroll goes up, your insurance costs are going to go up. In addition to that, your loss history. So how many claims you've had, how many things have gone wrong. If you can help keep those claims down, if you can come in with some really good safety practices, some good quality control on your equipment, reducing labor from people and moving to machinery to help, those lifting, twisting, trip, slips, falls, good hygiene practices in your safety protocol are going to save you a lot when it comes to how much it's going to cost. Some companies that have higher risk, people that are out in the field, their insurance costs more than all their payroll. It's a huge line item. And so making sure, one, you're getting the right coverage for your business, but you're getting it at the lowest cost. And, another type of insurance that we provide that's a little bit different that not a lot of agents talk about that's available is something called a captive. Right? So you could be in a group captive where instead of having the market determine your insurance costs, where, you've got someone like a Chubb or a Travelers or a Lloyd's that are, they've got so many losses.
Chubb's part of API, right? Or are they?
I'm not certain about that. I know Chubb is a big writer for oil and gas, Zurich, Lloyd's of London,
Yeah, Travelers, Zurich, Lloyd's of London, Chubb. That's about it. A lot of people
there's
love us.
Mid-Continent. Here in Oklahoma, there's National American Insurance Company. We love working with them because
They're Oklahoma and they know
they're an
our
Oklahoma-based company. They write a lot of oil and gas. They pay their claims, and when there is a claim, they send out one of their employees on site, or employees, from Oklahoma to go out to the site wherever the incident happened. Versus, if you work with a bigger insurance company that have to hire consultants or contractors to go out and look at that risk, it's just it's a lot faster and cleaner when you handle it in-house. So National American Insurance Company does a really great job here in Oklahoma. But if you're placing your insurance with a carrier like that, your premiums are going to be dependent on your losses, your risk, but then also off of all of the losses that other companies that are being insured by that market have had in the last year. So, maybe you didn't have any losses, but maybe 5 rigs blew up in Oklahoma. I don't even want to talk like that, but maybe they did. Yeah. And so that insurance carrier is going to have to increase everybody's premiums to help offset those losses. So something you can do is you can get into a group captive where instead of rating your insurance costs based off of the losses that the market has had, your premiums are only dictated by your losses. So if you can get your losses down, you have a lower premium. And in addition, they set it up so that if you are not having losses, you have the opportunity to get 60% of your premium dollars back. Ooh. So you paid for your insurance, you paid $1 million, and then you didn't have any losses that year. That means you get $600,000 back. That's a big deal. So if you are a larger company that has more than $250,000 in premium for your workers' comp, your auto, and your general liability combined, we can look at putting you into something called a group captive, where, like I said, you have the opportunity to get 60% of your premium dollars back if you don't have losses. That's several $100,000 a year. And for these good, safe companies, why would you put your insurance in the market where you're paying for everyone else's losses? Let's base your premiums off of your losses and keep that money in-house. Nice. So those are some things that we do differently, that we work with captives. We've got multiple insureds or different companies in those. That's something that we look at. And, it's not a one-size-fits-all. Maybe that doesn't make sense for your company due to one reason or another. And, then we can look at playing with your deductible, right? Like if you're trying to cut your insurance costs because everyone wants to cut their insurance costs, you're not having a lot of losses. Well, let's look at where your deductible is. We can increase your deductible and then your premium's going to go down.
It feels like all of our insurance goes up and up and up and up. But I mean, like you just said, if we look at it in that way, like, hey, by the way, we have ways to lower those costs.
Yeah.
And also, if we don't have the right coverage, I might be paying. I want my coverage. I don't want that much coverage.
Right.
Well, then, next time that incident happens, you're in trouble.
Yeah. I've seen, some of the things that I've seen just are insane where, people have their excess or umbrella policies. The point of that is to go over top of your
I want to go
workers'
way over the
comp,
top.
your GL, and your auto. You've got those underlying policies that maybe have $1 million in coverage. Then you want to go get your umbrella policy to go over top of those to extend them. So instead of having $1 million in coverage, you have 10 million or however much your contract or MSA says you need to carry, right?
That's something you brought. I hate going off in the weeds, but I always do. So the MSAs today are, they're pretty. They're intense.
Robust, yeah.
They if I have a portalet out at a location, I still have to carry the same amount of insurance as the guy with the trailer house over there.
It depends on the MSA, right? So at our agency, at Laird Walkingstick, we review MSAs for our customers free of charge. And we're not legal counsel. The part we're reviewing is the insuring agreement and the indemnity. But different MSAs I've reviewed, some of them have different classifications broken out for service providers to say, are you a tier 1, a tier 2, or a tier 3 in your risk for what you're providing for the operator. And if you're in tier 1, you only have to carry $1 million in insurance. If you're tier 2, it's 5. If you're in tier 3, it's 10.
But you also can go in and look and say, you know what, I'm willing to provide you that $1 million insurance because you are such a low risk out there. You show up once at a month when they move the rig off location.
Right.
And,
so what I actually do is, let's say you're dealing with an operator that does not have those different tiers broken out, and they're asking you to carry $10 million of insurance, and all you do is drop off some frac plugs on site. You're not even on site technically. You just drop it off.
Call me over.
Exactly. So then what we would do is we would just say, we're going to ask for a variance. So we draft up a letter for our insured that says we do not feel we need to carry $10 million because we're not actually going out on site. Our liability really would not likely ever exceed $1 million, and we want you to grant us a variance to reduce that coverage to $1 million instead of $10 million. So those are some of the things we do to help our customers reduce that insurance burden.
Well done. And they still get to be on, a vendor's list.
That's right.
That they wouldn't have got to otherwise.
That's right. Or we can add a policy. You can always increase the coverage, Another thing that we do that not a lot of people know about is it's called contract specific coverage.
Okay.
So let's say you have an operator that says you need to carry $10 million in your excess policy. Well, everyone else you work for only requires you to carry 5 million or 1 million. What we can do is we can go get a contract specific umbrella or excess policy where instead of it being based on the revenue for all of the companies that you work for the whole year, we're only going to base that policy on the revenue from that project or that contract specific. So you don't have to carry that 10 million for everybody that you do business for, just for that one account. And if that is something you need to do, you should go ahead and pass that cost on to the operator. Say, okay, it's the cost of doing business. And a lot of people may hem and haw and say, oh, Lisa, like this insurance is so expensive. I can't afford it. Pass that on. That is a cost of doing business. You need to get your coverage right so that you're in compliance with all of their MSAs and so you're protected if something were to happen.
Yeah, if something happens out there, everybody on location
they get called into the suit, even if they weren't even out there.
Yep.
But they were just
there you have a logo out there. You're part of it.
Yep, I've seen it. Yeah.
Rough. Well, this is what we do, everybody. We have amazing conversations about oil and gas, and time flies really quickly. But I'm going to let her get out of here. So how do people get a hold of you and start working on this? Because everybody, if you're in oil and gas or not in oil and gas, you need to be calling and texting and emailing and going on their website and getting Lisa to come to your office and start reviewing how you're insured.
Well, thank you. Yeah, Matt and I mean, we've really just scratched the surface on insurance. I'd love to
we could do this all the time.
Get in the weeds with each and every one of you to see, maybe you've already got the right coverage at the lowest cost, and I'll just tell you that flat out. Or maybe there's something we could do to get the package tailored a little better to you. So if you have any questions, you can email me at Lisa, that's Lisa, M as in Morando, my last name, at lw-ins.com. So that's Lisa M at lw-ins.com. Or you can always call me or text me, and my cell phone is 405-641-4601. So thank you for having me on here, Matt.
Edit that out.
Yeah.
No, I'm going to keep it in there.
I know, I'm going to get all these like prank calls. I'm like, do I give him my
just
cell
from me
phone?
and my friends, yeah.
Like, why not? Why not?
She already does sometimes, you just got to get a hold of her and say, where's your boyfriend? Why isn't he here yet? Fiance. I know, he did the right thing. Lock it down. You locked him down probably. That's what I think.
I don't think so.
I would do. I'm kind of Team Rod, just saying.
Yeah, he's pretty great.
Yeah, pretty great. Thank you for what you do.
Yeah,
God bless
you,
you.
Matt.
Making me do all of this. Every time I'm messing with a gadget and it doesn't work, I'm like, Lisa, you should be up here doing this. You're my co-host from now on. Take care, everybody. God bless. We'll see you next time. Happy holidays. Bye.